Welcome to the next panel. We will now talk about highly flexible workflow engines and decision-making machines as growth guarantors. With me is Robert Meters. I'm happy to see you. And thank you, Robert, for joining the panel. Unfortunately, we had to make one more change. Mathias Kratz, who was supposed to be on this panel, cannot be with us today. So, Robert, now we both want to talk about the important topic. Before we start, first, I think it's a good idea, a few words about ourselves. Robert, you are a member of SCHUMANN. What is your position? Please tell to us what we are doing at SCHUMANN.
Yeah, thank you very much. So my role at SCHUMANN is Head of Global Business and Financial Services. Financial Services covers solutions for banks, financial institutions in the field of receivables finance and factoring and leasing business mainly. We are doing other things like project finance, but these are core markets. And well, my passion is the global business. And SCHUMANN has been on a global platform for a long time with our customers in the insurance field, but also in the finance field. And well, to push that forward and to be connected in the various organizations. We heard that today with the FCI. There is a good contact and member of the ITFA and InsurTech. I'm representing SCHUMANN there and various other organizations in that field. And furthermore, we founded a new company last year, which is SCHUMANN International in London, and I'm one of the directors. And yeah, and that fits very well.
Very interesting. I see you're very international, and I see it's your life. Yes.
Yes.
Okay. Yes. And a few words about myself. I was managing director of ABC Finance in Cologne. The ABC Finance Group is a leading German financial service company with branches in other countries and is responsible for leasing, factoring and banking. And my expertise was in strategy marketing management, but also in IT and digitalization, as well as risk management. But last year, I decided to set up my own consulting company, and I help especially financial service companies in questions of management and strategy, risk management, IT, and these things.
Yeah.
Okay. So now,
by the way, we are really happy to have you on board as one of our strategic consultants.
Thank you very much, Robert. So now let's start. We speak about flexible workflow engines and decision-making machines. Modern credit risk management software and decision engine for automatic processes are essential for scaling the business. An ideal integration to support the business processes is achievable via modern interface technology and enables a suitable data transfer between the specialized software. Limit decision processes in credit risk management software significantly influence the business success of financial institution. I think that is important to say at the beginning. And Robert, now my first question to you. The current crisis, we had a lot of crises in the moment, and the difficult current economic situation certainly influenced the business all over the world, I think. I think it's a big challenge. How do financial institutions deal with this challenging economic situation and the external influence in risk management? What do you think?
Yeah. So during the whole day, we touched the topic that we are in times of uncertainty and volatile environment. Where does it come from? So we see that we have geopolitical challenges. We have supply chain disruptions. We see energy pricing and commodity pricing rising significantly, and related to that, inflation. So that all touches every sector. When we are talking about corporates, you will find really challenging situations here to set up supply chains in a proper way, maybe to find new suppliers. And there is a lot of change in that. So we are coming from just-in-time approach, and now we are talking about inventories again and the financing with that in times of inflation and increasing interest rates. So a complete different situation for the corporates. And we've just heard in the panel before, coming to the banks and financial institutions, that of course on the corporate side, the most important topic is liquidity.
Yes.
So liquidity and financing. And that belongs together. On the one hand, when you're investing, okay, you're very much related to what is the interest rate, what are the costs for investments, and to set up business plans for that, for investments. But on the other hand, liquidity is key, and this is very important. And when we are talking about banks and financial institutions today, we heard about Trumpf, one of our customers in the field of leasing and asset financing. So it's really key to provide finance solutions for the economy. So coming then to the receivables finance space supported by banks and financial institutions, what are we talking about? We are talking about managing risk, and provide liquidity to the economy and the related risk mitigation. And then the next sector is the insurance part as a partner and a supporter of the economy, and also the supporter when we are focusing on banks and financial institutions. We had the discussion already, so what is the role of receivables finance business handled by banks and financial institutions from the trade credit insurance space, and we see that they are supporting that kind of business. Capacity is in the market to support that, but it needs to be managed. So to conclude, of course we have a volatile situation economy. There are lots of challenges, but there are also opportunities to handle that using proper IT solutions. So IT solutions, when we are talking about that, we are talking about data. We are talking about data science. We are talking about data flow, processes, appropriate use cases to apply within IT solutions, to be enabled to automate processes in a proper way. We would come back to that point later on and elaborate that. And all for scaling the business while managing risk. So that is the area we are talking about when it comes down to what is the impact of the environment and the challenges for the companies using and utilizing IT.
So it needs flexible system. Yes, CAM, a lot of customer use CAM. It's a very good system for risk management, but it must be flexible. What do you think? What needed?
Yeah. So, well, having said that, how the environment is at the moment, the volatile situation, the various risks that we see, that challenges taking banks and financial institutions to respond to that. And respond means I would have to look which industry sectors have a higher risk than before, maybe increasing risk, and I have to respond to that. It's needed to respond on the environment, not only from the managing perspective, also from the perspective compliance and regulations.
Right,
so you need to adapt system to the environmental changes. That is really, really important. So, and looking into processes, when you have IT solutions in place, what is very important to respond quickly as a certain risk occurs, then that you could set up maybe new rule settings. What does it mean, for example, to evaluate risk in a different manner?
Yes, please give us an example, yes?
Yes.
Yes, please.
Yes. For example, if I would see that there is an increase of default risk, for example, in certain industry sectors. For example, these sectors which are very burdened at the moment by increasing energy prices, with an increased insolvency risk, or at least default risk for certain receivables finance or prolongations or whatever, that has an impact. So what would this self-service mean? That I could that I could adapt the rating system, that I could adapt the workflow system, data processing, and the rule engines to decide upon certain limits, for example, to decide upon a certain business in a different way as before. So I have to adapt to a different environment, taking this example, that there's a higher risk in a certain sector, for example, that I have to take into account, that maybe I increase the level of risk, default risk, by amending a little bit the rating, that it's a lower rating as before, and related lower limit that I would accept in a certain decision-making process when I'm dealing with the receivables finance, for example.
Yes. I think that's very good. We have now in time, we have enough examples.
Yes.
So I have another question. What core challenges do you see for banks to implement such projects? I think we have to talk about the organization, for example, or the commitment of the management.
Yeah, that's true. So the traditional way implementing IT solutions with financial institutions and banks are coming from the IT department itself, driving IT investments, where to invest in terms of IT architecture, what to program, and you're always competing a little bit to get the budget for certain investments. What does it mean? It means that maybe the business has certain priorities, want to see certain implementations, but due to the fact that there is a higher priority in a different field, maybe they have to wait. So losing time. And when we are seeing that from a different angle, when we are seeing that from a business angle, we are talking about a lack of time to market. And that could be significant. So because banks and financial institutions need to adapt to a changing environment, opportunities, risk, but the time lag should be as small as they can. So to speed up anything in the process of adaptation. So I think your question is referring to the internal management and organizational prerequisites to allow to close the gap time to market, to speed up the process to adapt to an environmental thing. So first of all, it's a clear commitment coming from the management. It's a question maybe to buy in software, because IT resources at the moment cost a lot of money. It's rare, it's difficult to get people. And there are solutions around that you could buy in, vendor solutions, that are much more flexible, and you're much faster to close the time lag to get that implemented. So to support the business, that is key in this respect. And also the vendors are required to provide solutions which are highly flexible in this respect, also flexible to allow self-services. So then the second point, besides the clear commitment coming from the management, is the internal organization.
Right.
So it needs to set up processes hand in hand, so the business, the IT development, and the vendor, to bring in the vendor in the game. So what we heard today was also that it is really important that the vendor understands the business. And the vendor should be part of the team to support that. So if I would allow you to adapt the system to any changes in the market, as we had with the example that a certain sector has a higher default rate than before, and you need to adapt your rule settings and your rating system, then of course you need to have the capabilities to do so. That means training, that you're trained handling that, because that has a huge impact when you're doing anything in the system that has an impact on limit decisions and rating.
Absolutely, absolutely. But there is a big advantage for every financial institution. Yes. Okay, I think we can feel it. So the new function self-service is a very good. It's a successful story for each financial institution, especially in this crisis. Yes, today and tomorrow.
Yes, you're right. We saw that in crisis, what it means when you have IT systems in place, digital processes in place, and when you're capable to react immediately on what's going on. So we have this example for industry sector and maybe a higher risk, a default risk in a sector. But you could also look into, as we mentioned before, the geopolitical situation. So as soon as there are sanctions coming in and there is a higher risk coming from the political side, then of course you need to be able to steer the processes in financing, that the rule setting to accept certain business, yes or no, that needs to be adapted immediately as soon as a certain risk occurs.
Yes, and what do you think, in your experience, how long does it take to implement, for example, new rules into the system until to go live?
Yeah, so that's a great question, but to answer that properly, what are the prerequisites? If you're not capable driving a car and you don't have the license, it could be risky.
Yes, that's right.
It is risky. It is risky doing that when you're not capable doing things. So I think it's very important that people are enabled from the technical side to handle workflow engines and decision engines and related rule settings in the background to do that. Capabilities. It needs training. It takes some time. If you would train somebody one day and would maybe expect that somebody would have to adapt anything within the system immediately, I think that wouldn't work. So it needs, for a certain period in time, support also by the vendor or people who are key users or very capable doing things. So it's a question of training. It's also a question of change management, to have a team available who feels capable doing so, and then it needs to be fully embedded in the process. So, what do I mean? There is a request coming in that there is a rule setting that needs to be amended somehow.
Yeah.
Then it needs to be clearly defined what to do. Then the implementation phase should be in an environment which is a development environment.
Yes, right.
And then you're moving on to a situation where you run through testing, acceptance testing, and then go live. That's the typical way we are doing that.
Yes, that's the typical way in each project.
Yes. And in each project, it depends very much on the project.
Yes.
So the time frame depends very much on that. But when we are talking about that kind of process with various related parties and organizing that process, self-services would allow to significantly reduce that process. However, it is necessary to run through a clear process of acceptance before go live. Why that? Because you need to ensure certain quality, to see what is the impact on the overall rating and limit making machine and decision engine, for example. And it's so important that it runs through a proper acceptance way before go live.
Yes. So first you have to look into the company. What is the organization? Yeah. Are there the skills?
Yes.
Yes. That is the first question.
Yes.
So, and if there are the skills in the company, I think you need a short time to implement the self-service, and yes, it's a big advantage for every financial institution.
Absolutely.
Yes. Yes.
So what I described into detail sounds that it would take a longer period. But that's not what I mean. So what I mean is as soon as the capabilities are there to apply self-services, then the time period could be very short. However, it needs to be done in a proper organized process. That is also important. And it's not only the IT side or the developer side, it's the other way around. It's coming from the business side or the compliance or risk management side to take the initiative doing so, and could even do that on their own without IT support in this respect. And that is a game changer.
So the focus of such a project, yes, it's IT, but it's more in the other things you explained.
Yeah, exactly.
Like risk management, like compliance, like all this. Yes, right. Okay. Could you give us some more examples of rule settings? Yes, I think that's very interesting for each who is looking on yours.
There's also something in the field of, for example, risk mitigation. So for banks and financial institutions in the field of receivables finance, it's a question how to set up risk mitigation strategies. So what does risk mitigation in receivables finance, for example, mean? So the handling of securities, evaluating and monitoring securities. On the other hand, it's trade credit insurance coverage, and it could happen that you also have a certain part of uninsured business besides the insured business. So if you want to extend, for example, the SME business, then a rule setting to get the right information in to evaluate and monitoring risk and managing risk portfolio on the uninsured side, it's very important to set up workflows and embed that in decision engines to select the right information source to evaluate and monitor the risk. So that could happen that it's rating agencies, and it could happen that it's payment experiences that you're evaluating all the time.
Yes.
And then you have the insured segment, and it could happen if you would see that there is higher risk coming in, and you want to take also what is former uninsured, to take that also in insured business and policies. The rule setting needs to be adapted in a certain way.
Yeah, yes.
You would have the same in the insured segment if you set up new policies. Well, you have the renewal phase every year, and maybe some parameters change because of a new policy, then it needs to be adapted. So you cannot allow that it's adapted somewhere in months. No, it has to be adapted into force immediately after this new contract, after new renewal. Is in force. So that is another example where you need to react very fast, because you have a complete different situation in this respect, coming from the new policies to be implemented.
Yes.
And to complete the picture, when you're doing business on a global level, you might have many various policies, maybe various trade credit insurers, and you need to handle that in the same way, and that's also something that is very important in terms of self-services.
I think that's very important. The business is international, so we have not only to look on one country, we have to look over the world. Yes, and in the moment, in this crisis, in the moment, it's absolutely important. Okay, I think that's very good, very good
and it
examples.
Could also, to complete that, maybe just what we saw is, as soon as certain sectors, from the view of the trade credit insurers, have a higher risk, default risk, or probability of default, and they reduce the capacity for that certain sector, that could have an influence on your own business, and it could happen that you do not get the coverage and as you expected. Then you need to set something up, maybe in workflows, to get other securities to cover that business, to ensure that in terms of risk mitigation. So there are so many use cases I could think of coming from the crisis and the situation that we have, that systems needs to be adapted when we are talking about IT-supported approval process and all of that, and automation, to have the capability to change the system and the rule settings and decision engines.
So we can say risk management just in time. Yes? Is it the right word?
It has something to do. While I'm hesitating a little bit with the just in time, it could happen that it's really immediately.
Yes, it's a difficult word in the moment, yes. But for the risk management, it could be very good. Yes, fantastic. Yes, well, my last question. What results could you achieve with rule adjustment? When you, what is your overview? Yes.
So I think I have different thoughts here. What can I achieve to be compliant, first of all? So to set up rules in the space of credit risk management requires a clear view on how risk management has to be done within the company. It's a management decision.
Right.
But then it's also something the regulator comes in and checks whether everything in the space of compliance and regulations is covered. And credit risk management is key.
It's absolutely key.
It's absolutely key. So therefore, the starting point here is coming from the management, coming from the compliance view, and the regulators. So that is one side of the coin. The flip side of the coin, of course, is anything that's related to processes that needs to be competitive to other market players. It's so important to have the right customer experience, to be fast. Time to market is very important. Well, we took that from the credit risk angle, but you could also take that from the opportunity angle. So if there are opportunities in the market to provide services, financial services, financial products, well, time to market is very important. So if you're in a time of uncertainty and a volatile situation in the economy, you cannot wait 12 months and let's see whether we have something in place after that. No. Now it's the opportunity, and you have to take the opportunity, and otherwise competitors will take that. So it's also a competitive edge to have something in place when we are talking about IT support and related quick adaptations to the opportunities in the market, to do that quickly on the one hand, and at the same time properly in terms of compliance.
Right. Yes, Robert, thank you very much. Yes, now we are already coming to the end of our interview. Yes, very interesting. I think self-service, especially in crisis, and I think it's absolutely important for the future in the business. Yes, is very important. So I think it's the right way in developing in income in Schumann. Yes, that's absolutely the right way. Thank you, Robert, for the good insights into the business. Thank you very much.
Welcome.
I think you have made it clear how important it is to have a high flexible risk management system. Being able to set the rules yourself, that is the important point, is enormously important for managing the risk. Thank you very much. I'm sure that our audience has received valuable advices. Thank you very much, Robert.
Thank you.